Imagine a stock that was left for dead. We are talking about a company that was trading under $1 just a few months ago, a penny stock that Wall Street had completely written off as a failure. The charts looked like a graveyard. Investors had capitulated. The volume was dry. It was a ghost town. But then, in the blink of an eye, everything changed. This company suddenly found itself at the absolute center of the most aggressive White House policy shift we have seen in decades. We are looking at a ticker that has already rallied nearly 500% from its lows. That is a life-changing move for the early birds. But if you think you missed the boat, look at the volume coming in now. If the latest rumors swirling around Washington are true, the move to $10 is not just possible, the math suggests it is inevitable. This is no longer just a speculative energy play. It is a political battering ram. Wall Street insiders are quietly calling this the crown jewel of the new American energy dominance doctrine. While the retail crowd is distracted chasing NVIDIA and AI chips at all-time highs, the smart money is silently piling into this domestic manufacturing powerhouse that just secured a seat at the table with the vice president himself. The setup here is perfect, but it is also dangerous. If you missed the first leg up, pay attention, because the second leg could be the widowmaker for the bears. Listen closely. This is Smart Stock Sam, where we decode the market and build the wealth. We avoid hype and focus on just gains. I am Sam, and I don't gamble. Rather, I execute every trade with immaculate planning. If you are tired of losing money on gut feelings and want to start trading with a mathematical edge, hit that subscribe button right now. Wall Street is hoping you ignore this video. Let's make sure you don't. To understand why this specific stock is exploding, we have to zoom out. You cannot trade this chart if you do not understand the war being fought over the U.S. energy grid. We are currently witnessing the complete reinvention of how America generates and stores power. For the last 10 years, the solar and battery market was a game dominated by cheap Chinese imports. It was a race to the bottom on price. American companies could not compete. They were crushed. But the game has changed overnight. We are entering a new era of protectionism. Tariffs are going up. Borders are tightening. The demand for American-made components is not just a slogan anymore. It is a federal mandate. This sector is no longer just about saving the planet or going green. That is the old narrative. The new narrative is national security. The Pentagon, the White House, and the big tech giants all agree on one thing. We cannot rely on foreign adversaries to power the AI data centers of the future. Think about the sheer scale of what is happening. AI requires 10 times the electricity of traditional computing. The U.S. power grid is old, fragile, and maxed out. We need new solar capacity, and we need massive battery storage to hold that power. The companies that build the hardware for this transition are going to be the Standard Oils of the 21st century. The company we are tracking today is perfectly positioned to capture this shift because they aren't just drawing up blueprints on a napkin. They are opening massive factories in the heart of Texas right now. I want you to look at the clues before I give you the name. This is important. You need to see the pattern. The first clue is the rebranding. This company recently wiped its slate clean. You used to know them by a Nordic, European name that sounded foreign and detached. They realized that in this political climate, perception is reality. They rebranded to sound like a futuristic American titan. They changed their identity to align with the America First energy policy. The second clue is the geography. In real estate, it's location, location, location. In energy, it's the same. They just operationalized a massive gigafactory in Dallas and immediately announced another $850 million solar facility in Austin. Why Texas? Because Texas is quickly becoming the energy capital of the world, bypassing California and New York. Texas is where the deregulation is. Texas is where the speed is. But here is the kicker. Here is the clue that makes the hair on the back of my neck stand up. The CEO was just spotted meeting directly with Vice President J.D. Vance. They weren't just having coffee. They were discussing American energy dominance. When the White House rolls out the red carpet for a microcap CEO, you know something big is brewing behind closed doors. You do not get that meeting unless you are part of the master plan. The company is T1 Energy, ticker symbol TE. Now, stop. Do not open your brokerage app yet. Before you FOMO in at the highs, we need to take a deep breath and look at the ugly side of this trade. This stock has a history of extreme volatility that would make a crypto trader nauseous. It is a high-octane growth play, yes, but it also comes with a cash burn risk that we cannot ignore. We need to dissect the numbers to see if this rally has legs or if it's about to run out of juice and leave you holding the bag. Let's dig into the operations. T1 Energy, formerly known as FREYR Battery, has pivoted hard. This is known in the business as a hard reset. They have effectively abandoned their European ambitions to become a pure-play U.S. clean energy manufacturer. They make the solar cells that generate the power and the batteries that store it. Think of them as the hardware store for the new American grid. When there is a gold rush, you don't dig for gold. You sell the shovels. T1 Energy is selling the shovels, the pickaxes, and the denim jeans to the AI data centers and the utility companies. Their moat is simple: policy protection. With the government locking out foreign competition through tariffs, T1 Energy is becoming one of the few viable options for utility-scale projects in the U.S. If a utility company in Texas wants to build a solar farm, they are running out of options. They have to buy American. That puts a floor under T1 Energy's order book that didn't exist 6 months ago. But a cool story doesn't pay the bills. Let's look at the Smart SAM data. The financial turnaround here is nothing short of a miracle. This is what caught my eye. A year ago, this company had virtually zero revenue. They were a pre-revenue concept stock, which is Wall Street code for burning cash with nothing to show for it. Fast forward to today. In current third quarter alone, they are projecting net sales between $200 and $210 million. I want you to pause and think about that. They went from 0 to 200 million in a single quarter. That is not just growth. That is an explosion. That is a vertical line on a chart. It proves that the product is real and the customers are paying. However, we have to be realistic about the bottom line. Revenue is vanity. Profit is sanity. They are still posting a net loss of around $32 million. They are spending money faster than they are making it. They have about $87 million in cash on hand. In the world of gigafactories, $87 million is pocket change. That is enough to keep the lights on for a few quarters, but they have ambitious plans to build an $850 million factory in Austin. Do the math. They do not have the cash in the bank to build that yet. That means they will likely need to raise more capital, which brings us to the biggest risk: dilution. If they issue more shares to raise money, your shares become worth less. The revenue growth proves the demand is there, but the cash burn is the metric we need to watch like a hawk. Now, let's go to the charts, because this is where the money is made. The narrative tells you what to buy, but the chart tells you when to buy. The stock is currently trading around $5.83, riding a massive uptrend. It is parabolic. But buying a parabolic chart is the fastest way to go broke. We have firmly established support at $4.30. This is your accumulation zone. This is where the institutional algorithms will likely step in to defend the price. If the stock pulls back to $4.30, that is where the risk-to-reward ratio makes sense. That is the smart money entry. On the upside, we are looking at a psychological resistance around $7. Why 7? Because that is where the trapped buyers from years ago are waiting to sell to get their money back. It is a psychological barrier. But here is the setup. If we can break through $7 on high volume, there is very little friction preventing a run to $10 plus. The chart opens up. The momentum is undeniable, but do not chase green candles. Wait for the retest. Patience pays. The analyst community is scrambling to update their models right now. They were caught off guard. The consensus is shifting to a strong buy. Firms like Needham and Roth Capital are raising their price targets, realizing that their old bearish thesis is dead. The street is waking up to the fact that T1 Energy isn't just a concept stock anymore. It's a revenue-generating machine with massive political tailwinds. They are realizing this is a binary bet on the U.S. election cycle and domestic production. And right now, the political winds are blowing directly into T1 sales. Now, before I give you my personal price target, we need to be crystal clear. Listen to me. This video is for educational and informational purposes only. I am not a certified financial advisor, and nothing here constitutes financial advice. Trading stocks, especially volatile ones like this, involve significant risk and you can lose your capital. Always do your own due diligence and consult a professional before making any investment decisions. Do not trade with money you cannot afford to lose. So, what is the verdict? The bull case is clear. T1 Energy becomes the de facto leader of U.S. solar and battery manufacturing. They ride the wave of government subsidies, they capitalize on the AI energy boom, and protectionism pushes the stock to $10 and beyond. In this scenario, they secure a government loan or a partnership to fund the Austin factory without diluting shareholders. The bear case is that they burn through their cash too fast. The factory delays pile up. The tariffs get delayed. They have to issue millions of new shares to stay alive, crushing the stock price back down to $3. My personal take. I am incredibly bullish on the narrative. The macro setup is once in a generation. But I am disciplined on the entry. I am setting buy orders at $4.30. I am not chasing it here. I want the market to come to me. If I get filled at $4.30, I am holding for double digits. I am betting on the American grid. I have a question for you, and I want you to be honest in the comments. Do you think the American energy boom is real, or is this just political hype that will fade away next year? Comment $10 or hype below. I read every single comment. If you want to stay ahead of the next breakout and find these hidden gems before the crowd, subscribe to the channel. Decode the market. Build the wealth. I'll see you in the next one.